Good morning everybody, and this is your Dow Jones day trade setup for today. So we are still in this triangle. As I said yesterday, we're more than likely going to just stay in the triangle for the rest of the week. The bottom part of the triangle is a little bit messy, but for all intents and purposes, we're in a consolidation area, we're in a range, in a triangle, oscillated all over the place. There's actually nothing that is telling you anything on the 8 hour right now. If you look at the 3 hour, you'll see pretty much the same scenario. It's just big up, big down between two levels, and we're selling off the top level and we're buying off the bottom level. This was a fairly decent short going with the trend. Remember, the moving averages are pointing down, the trend is down. For as long as we're below the 155, the trend is down. If we jump onto the hour, you'll see the chaos that we had over the last couple of days, above and below the moving averages. But ultimately, the faster moving averages are still below the 155, so it is still, you still should be favoring moves to the downside. And look at how we jumped up to this structure, this level up here, and we sold off immediately back to the bottom of the triangle basically. So that's the range that we're looking at. So you are trading between 33,398 or 33,400. Just keep a few points below that just to protect yourself, and then you're also trading from 32,821, where you also want to just keep a few points off that. So what could break out here? We could probably come back into moving averages, which are heading into the middle of the triangle, and sell off again. But as far as I'm concerned, sit back, wait for the Feds. Feds will be out with their song and dance tomorrow, and then you can see whether there's direction. Right now, the Russian-Ukraine conflict is not really driving the market. It's just creating volatility. We're waiting for the Feds right now. So we're waiting for the Feds to tell us that there are interest rate hikes, as they've been saying. And we're basically waiting for the Feds to say there's interest rate hikes on whatever date they've chosen. And then what's happened, the market's going to retaliate, and you'll probably get a nice juicy short out of that. Now, bear in mind, the Feds could also decide that's enough for the market falling, and then they start propping the market up again. So, they're 50-50. You might as well just sit back and toss a coin and see which way it falls. So for as long as we're moving up and below the moving averages like this, there is no real trade for me anyway. If you are one of those traders on the lower time frames, even on the 15-minute, look at this. You can't really get a grip on anything. I suppose you did have an opportunity here at the gap. I suppose just above the gap would have been your entry there. You could maybe have had a stab at along there with a 100-point stop loss. That would have given you a 4-to-1 trade. But yeah, very difficult to call that kind of stuff at the moment. So just pay attention to this scenario on the 15-minute, because if we stay below the moving averages, then there's a good probability that we drop below this. And if we do drop below 32,821, then you are expecting a bigger move down. But bear in mind that these tails here, all these inside tails, will offer some form of support. And when you look at the bigger time frames in that zone, you can see quite significant buying power coming in around this 32,300 area. And even if I go back in time, you can see quite a lot of buying opportunities. If we get through that area, then I would expect us to probably drop a lot further down to 31,600 or 3200 first, and then 31,650 area. But that's quite a way away. So anyway, it's sit on hands for me until we break through this triangle or this range. And that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.